something must be going wrong with my computer because Nvidia is showing up that it's actually going down on the day. Let me fix what I got going on here. Like tap the screen a few times. No, it's actually going down. Nvidia is going down. Let's talk about this. Nvidia is down today, another 3.3%. Yesterday it was down 4%. And if you're talking about the peak to trough move, that is a move of almost 12% on the price of Nvidia. And why does this matter so much? We don't talk about individual stocks all that much on my channel, but some individual stocks are very much worth noting. Even if you trade other things like gold and currency pairs or things like that, keeping an eye on the world's now biggest stock is very important. And we can see that the indices are not loving this pullback in Nvidia, as the market has recently seen very thin leadership in terms of the stocks that are pulling the indexes higher. And the reason I bring that up is that without Nvidia making all-time highs every single day, the indices immediately have started to struggle. You can see the correlation between the two. That being said, what is the cause behind the recent pullback in indices? And is this something that is going to be a bigger pullback, or is it another kind of short, brief pause before another push through the highs? Well, I'll break down my thoughts on the indices today. We're also going to talk about gold. We'll talk about silver. We'll talk about the dollar and all of that PMI data that we got overnight. It's an action-packed video, and all I ask is that if it is helpful to you, hit that thumbs up button. It really just helps to support my channel, and I greatly appreciate it. Let's jump into some content. So before we talk more about the indices, the put to call ratio is currently showing up pretty dang bullish. People are very bullish on the markets, at least in terms of options volume right now. People are very optimistic about higher prices for the NASDAQ and for stocks as a whole. So with so much positive sentiment going into the market right now, which has led to this huge run, what is the concern here? Is there potentially more room to the downside for the indices? Well, to better understand the indices, I think we need to take a look at what is called sectors, which are the breakdowns within kind of sections of the indices. Like, for example, we could take a look at the semiconductors sector, which is, of course, an ETF that we can take a look at. It's a component of the technology world. The technology world has been really strong overall. Here's XLK, which is an ETF that tracks a lot of tech stocks, SMH. These things look great. But then if you take a look at some of the other ones out there like real estate does not look so pretty. And what about industrials? Industrials look pretty good. What about utilities? Utilities, not so great. These are your power companies and water companies and things like that. Well, energy also not particularly exciting. And healthcare, it's done okay, but it's kind of been flat recently. The long story short here is that in recent times, most of the market's rally has been thanks to a small number of stocks. Big technology names like Microsoft's and Apple's and Nvidia. And so these small number of companies are really taking charge in terms of keeping this market going higher. But if any of those start to crack, like I mentioned at the start of this video, Nvidia, if that company starts to see a little bit of a pullback and that becomes more of a pullback, it could lead to the actual indices themselves having a bit of a correction. We just hit 20,000 on the NASDAQ, and I think that it is possible that this could be, based on how this candle closes today, the start of a bigger pullback. So what I mean by that is that if we get a red close today, and specifically what I'm talking about is this candle closing within the lower portion of this candle. Like I'm not saying, I don't really want to see a candle close like this. Otherwise, that just looks bullish and it still looks strong. But if you get a candle close that looks more like this, it may be time that we do accept that bears may be taking a bit of a turn and the market may give back some of its recent gains. And it is likely going to be very much on the shoulders of Nvidia as to whether or not that does happen. Now we got to talk about the PMI data that we saw last night out of the UK and Europe, and now this morning, the US data. Let's break that down. So out of the UK, we had stronger than expected retail sales. That is a positive for the UK economy. We also saw them revise the previous one higher. So there's some strength there in the retail sales number, but still overall, there's a bigger picture here I'll show you. French manufacturing and services PMI came in light. German came in light for both as well. And for Europe itself, it came in light across the board. Now, this is, of course, the big one, as Germany is the powerhouse economy of the European zone. And then we also have the UK services PMI came in light. What you can see here is a pretty consistent theme of weaker than expected PMIs. Now, what are PMIs? Remember, a quick reminder for the new fundamentalists in the audience, if you're learning this stuff, PMIs is the Purchasing Managers Index, and it is basically a surveyed response from people who make hiring decisions and purchasing decisions for companies that are important to, the French or German economy, and it forms an index. A number above 50 is considered growth. A number below 50 is considered a decline in the economy or the outlook for the economy, according to purchasing managers. Long story short, the economy out of Europe looks a little bit weak in terms of these numbers that we got this morning. But then came along the US. And of course, once again, the U.S. outperformance is pretty clear. We saw strong PMI numbers, both in the services and manufacturing numbers for that U.S. Capitalist society just continues to roar hot. And this presents a problem for currency traders and for traders who are watching things like gold, etc. What we're seeing here is the dollar strength coming into the picture, right? So you got a big surge higher in terms of the dollar index here on this data because of the divergence between the two stories. Again, Europe showing signs of slowdown, and at the same time, US showing considerable strength, at least in a comparison way. So the dollar looks, at least in the short term, poised to go higher in my view. We continue to see, again, that divergence between the two main economies there when talking about like the Euro USD. That's why we're seeing, again, a continued downward trend on this one, just showing that dominance of the US dollar. The pound also broke support levels here. If you're watching Currency World, keep an eye on these currency pairs. It's been very interesting to watch. And this is also why yields actually jumped up today with the hotter than expected PMI numbers out of the US. These hot numbers, what they do is they suggest, well, maybe we don't see as many rate cuts this year. Maybe we're back down to one rate cut this year. And that change in the wind is enough to get the market kind of a little bit spooked. That's why I think you're seeing indices down a little bit today. That's why you're seeing gold and silver down today. I also just picked up a silver position, and my gold trade, I'll give you an update on this one really quick. So I am currently floating a pretty good position on GLD. I'll show you. But let me be a little bit transparent here with my position. This was a $20,000 position. So even though, and this is the swings of, that you kind of accept when you build up your capital over time, the swings get more aggressive. Here's a pretty big swing that I'm going through right now. I had a position on that was up at one point $20,000 this morning. Actually, it was up $20,000, which is a huge return. It was a really remarkable trade for me. And suddenly, with this PMI data, the swing was so violent, the gold market actually fell by 1.23% at the time of recording this. If we trend any lower, then my profit has been wiped out from 20 down to probably a final gain of somewhere around $9,000, which again, still a really remarkable profit. And I'm not complaining because a profit is a profit. But I can't help but feel, man, that's a $10,000 wipe off the table, really quick on this position. And that is, again, the swings that I go through with my account. So if you enjoy the transparency that I try and bring to this channel, I just want to ask if you could, again, hit that thumbs up button. Also, I wanted to remind you guys that if you do want to see all the trades being taken by myself, the winners, the losers, the ups and the downs on real brokerage accounts, you can sign up to get access to our trade notifications service, our signal service inside of our Discord channel. It is currently 50% off to get into the VIP membership group. Again, like I said, it is half off, just like my trade basically got sliced in half here today in terms of P&L. The membership is half off as well. And again, I don't want to come across as I always win and I never take losses, because I certainly have losing streaks, drawdowns, just like any other trader. But if you'd like to trade alongside myself and my team, this is an invitation to do so for our biggest discount of the entire year. Click the first link down below in the description to chat with a person on my team who can get you that discount information, as well as answer any questions you might have about the membership. My support staff is totally willing and able to help you out if you have any questions on that front. Another one of my trades that is giving back some P&L here today is my TLT long position, which is again a bet on bonds, and bonds go up in value when yields are expected to fall, and they, on the flip side, lose value when yields rise. I mentioned earlier, yields are on the rise today with those strong PMI numbers out of the US. And the way I kind of see this is that if that continues to become a trend where we see strong economic data, I might need to change my thesis on stuff. But this is one point of data, and it is worth mentioning that I still like the idea of staying long TLT. I am floating some positive territory P&L on this trade. But just like gold, have given back some of those gains here today. And at least on the gold front, I might, trail out of this trade for a profit on TLT. This is a position trade. I don't have a take profit or a stop loss. This is a fundamentals based kind of momentum, not momentum trade, but rather a position trade for me, or more of a longer term swing trade that I've got in the account. By the way, if you're looking for a brokerage that you can trade directly on TradingView like I do, I've got a couple of brokers linked down below in the description. All of them you can sign up with. You can trade directly on TradingView, which is super convenient for trading and keeping track of your positions. If that's something that you're interested in, you can use those links, and those are also affiliate links. You'll be supporting my channel here if you would like to do so. You don't have to use those links. You can sign up without them, but if you do choose to support my channel, I really appreciate it. Thank you very much for watching today's video, and see you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.